I'm Phil Grandy, philsgang.com. philsgang.com radio show, syndicated radio show, and podcast. Now, we're going to finish the end of this month. This is the last week in June. Do we start earnings? And I have been doing this for over 50 years. I've never seen such lying going on in this stock market, such masking. The biggest problem we have that's going to take this market down big is the banks. The banks are in deep trouble. And the way they've been masking the banks, here, take a look at the chart. Look how the banks, they can't get out of their own way. Banks always lead the whole stock market. But what they did to cover this up is they went over and they took those 5 big tech stocks, took 2 of them, the S&P and Microsoft, injected $15 trillion to keep pushing those 2 tech stocks up. So everybody's looking at the Qs and how there's going to be the soft landing. Look how great things are. No, things aren't great. Unemployment, which has spiked to a 4-month high, okay, and wages has hit its 18th annual decline over the last 19 months. So how can we have a soft landing when you got that going on? Average savings. They don't want to talk about that either. They tell how much cash they have. Everybody, the consumer's resilient. He's got all this money. He doesn't have all this money. What are they talking about? Are they nuts? The average consumer, the savings, remember, since 1959, we've always had an average of about 8% was in savings. We're at 2.7%. 2.7%. We're at a 15-year low. So here we got wages, okay, have been in decline over 19 months. We got savings that's always averaged 8% since 1959, is now 2.7%. In fact, adjusted for inflation, savings is down 88% from 2020 when it peaked, and 61% lower than before the pandemic. But nobody wants to tell you this stuff. So that means the banks are having big trouble because the more they keep raising the rates, the more delinquencies. See, when yields are going up, interest rates are going up. The banks enjoy that. The banks make a lot more profits. But the problem is, as they're on one side pushing up inflation, yields to fight inflation, they're pushing those up. Let's fight inflation, but that's killing the banks. So what they did is manipulate over here the Qs to rally by taking the 5 biggest tech stocks, you know them, and inject into 2 of them $15 trillion, Apple and Microsoft, to keep those going up so that nobody notices what's going on over here with the banks that are ready to collapse. So what I think is going to happen is we're going to get a rally in the S&P. Probably we're going to get a sell-off of about 5 to 7%. And they're going to have one last big rally. Because remember, J.P. Morgan, Goldman Sachs, Morgan Stanley, they got to get their institutions out. They got to get their pensions. They got to get let's say they represent the police of Chicago or the police of New York or the nurses union of Minneapolis. That's who they represent. Now they got to get them out. So they need one more rally. And they know the banks are in such trouble. It's going to take this market down. 2008, it's going to look like kids play. They know this. So we're probably going to get a pullback, about 5-7%. Bam! One more big rally, and that's it. And then we have our crash. But listen to what I'm telling you. Everything we look at, there's always a decline. Existing home sales, new home construction, all down. Retail sales, down. Industrial production, down. Building permits, down. There's no good news anywhere. But all you keep hearing is, hey, boy, the consumer's strong. They're resilient. Like the labor market. Say, boy, look how strong the labor market is. No, it's not. A labor market is strong when you have employment and it's all good, solid jobs, high-paying jobs with good benefits. We don't have that. We have 2 out of 5 jobs that are all part-time crap jobs with no benefits. That's not a strong labor market. A strong labor market is when you have wages that are above inflation. Our wages are below inflation. And we got all these part-time jobs. How can you say the labor market's strong when everybody has to have a second job? How can you say we're going to have this soft landing when depending on two stocks, Microsoft and Apple, to keep going higher by financially engineering, putting $15 trillion in to keep them going up, and kind of like hide what's going on with the banks? We have another big problem. We have all the commercial real estate. They're rolling over $350 billion in loans. Half of those people, those buildings, the owners, they're going to walk away because they have no tenants. They can't rent them. I've been doing this for a long time, 50 years, 52 years. I've never seen how 5 stocks are masking an unbelievable, just terrible financials, the banks. And all I've known for 52 years in this market, if you got strong financials, strong banks, you can get through anything. But when your financials are the weakest player, and they're depending on 2 out of 5 tech stocks to drive both the S&P and the NASDAQ, are you nuts? And that's why it's very important, okay, that you learn how to sell short. And we have a beautiful chart. Not only does it tell you how to sell short, but it telegrams to you. It shows you, when to pull the trigger to sell short, when to pull the trigger to buy. It's my color-coded chart. It'll help you. But I'm not trying to sell that. What I'm trying to warn you is that the banks are sending us a signal, okay, a red flag. Our yields are inverted. We have our savings at a low. Our wages aren't going up. Our wages are behind inflation. We have terrible housing numbers are coming in, and everything is covered up with, the labor market's strong. Everything's wonderful. Soft landing. Bunch of crap. Okay, I'm starting to repeat myself. So again, make sure you start watching your stocks. Let me show you something before I leave. Thank God I designed my own color-coded chart here. It tells me when to buy and when to sell. I don't listen to fundamentals. I don't pay attention to fundamentals. Fundamentals are useless. Don't pay attention to fundamentals. Pay attention to your money flow. See right here? Look, these are the Qs right here. Look at it. So they take 2 stocks, keep pushing up the Qs. They keep on pushing up Apple. This is what they're doing. Look, pushing up Apple. This is what's driving the whole market. Are you kidding me? Microsoft. Pushing up the market. But the beautiful thing about my charts is they'll turn red and give you a warning that money's coming out. So please, look, if you want information on my charts, that's fine. But the reason for my message is to protect you, to tell you that they've been masking all this bad news. And it's the financials you've got to keep your eye on, not the tech. Tech take care of themselves. The financials are going to take us down with China. Our financials and China and big tech taking us right down. You'll see. See you on the charts. Go to philsgang.com. Join my gang.